no way to keep the pump. So it's a lot harder to see when it's happening. It's a lot easier to see after it's happened. But yesterday we had 5 waves, and it's kind of interesting because it happened roughly at the same time that I was kind of explaining about Elliott waves. So let me just mark them out for you, and then we'll see what that means. You take it from the low where it begins effectively. That's wave 1, wave 2, wave 3, wave 4, wave 5. That's your 5 waves. Okay, the rules are intact, so it's important to check the rules are intact. Remember the rules. The 4 can't come underneath the 1. That's perfect. The 3 can't be the shortest. That's perfect. And the 2 can't come underneath the 0 point. That's perfect. So as long as those 3 rules are intact, you have your 5 waves. The other interesting observation is that here we had a flat correction. This is flat. You may not think so, but I think it's quite flat. Yeah. And here you have a zigzag. It's kind of what I was saying. Usually when one is flat, the other one is something else. And there's your zigzag. It's quite interesting because look at this. What is that wave? It's wave 3. It's just like one big lump of green. But it is. I mean, you can tell. It's definitely impulsive. And you could probably count 5 in there, but I'm not going to. It's not really necessary. And so the question now is this the beginning of wave 1 of something new? Or is this the continuation? Is this like the wave 1 of a wave 3? This is the hardest part to know, whether this is the beginning of something new or whether this is the continuation of something that happened before. And the reason why I say that is because look at this. Yeah, look at this. Look at this move here. It's quite impulsive too, isn't it? And so potentially you could be looking at I haven't really gone into depth. It's quite messier. It's not easy. But potentially you could be looking at some sort of wave 1 there, some sort of wave 2 here, and this could be the wave 1 of the next 5 waves, which is our wave 3, wave 4, 5. Does that make sense? Potentially this is what we're looking at. Why is this potentially what we're looking at? Because we haven't taken out the 0 point. Yeah, and because this is an impulsive move. You can see it's quite impulsive. Impulse, there's some sort of impulse there, and then there's the finale is an impulse too. I could probably figure it out, and I probably will actually, because I want to make sure I'm right, or at least I'm as right as I can be. But potentially that's your first 5 waves in wave 1, and potentially we're looking at the beginning of another 5 waves, and this is wave 1. Okay, it's kind of what we're looking at right now. If this is correct, and I don't know, you don't know if this is correct or not, the rules still have to apply. The rules that I was talking about yesterday still have to apply. If we do expand up with the 3, the 4 can't come underneath the 1, if that's the 1. And then the 3 can't be the shortest. So as long as the 3 isn't shorter than the 1, then you could have a big 5. If it is shorter than the 1, and the 4 corrects, then your 5 is restricted by how big it can be because of the length of the 3. And that's basically, that could be your 5 waves. If that was to happen, something like that, then this whole arm is your wave 1. See, that whole thing becomes your wave 1, and then you're looking for a higher time frame ABC correction to begin with, which will be your wave 2, and then you'll be looking for a higher time frame bigger impulse, which will be the wave 3. And that's just how it works. All right, so that's kind of gives you context, and that's how it's going to happen. Yeah, don't think that it's going to happen any other way. This is how it's going to happen. It's going to happen something like this. You're going to get waves. You're going to have impulsive waves. You're going to have corrective waves. It's just part of the way the markets work, okay? And it might be like I've drawn it, or it might be something else, but something similar, yeah? And that's going to help, because when we see these 5 waves, when I was looking at the waves this morning, yeah, up here, guess what I did? I shorted, okay? And I had taken profit. So I'm very careful to take profit, simply because there's still bullish market structure. I mean, it's more profitable to long, obviously, here right now. As you can see, it's quite bullish, but at the same time, I see the 5 waves is over, okay? I see the 5 waves is over, and I think it's very unlikely that I've actually been stopped out, because I left the runner on a break even. That's fine, you know. Yeah, so I took my profit and I was stopped out on the runner, and all I did was I saw that it was 5 waves was up, and I saw that we basically here we lost these red candles here I saw as soon as we lost those red candles, I shorted, and then as soon as we came down into a little bit of resistance, I saw a little bit of support here. See, there's a little bit of support. I took my profit, and now we're getting a little bit of a stop hunt. Probably there's probably a stop hunt or something, but this is only going to give people an opportunity to take profit. Now people are still sitting in positions. This rally now is going to give people an opportunity to take profit. I'm not expecting another impulsive wave, yeah. What I would be expecting is now a correction, right? Now, what is the correction going to be? Well, let's start counting. Yeah, that's how it works, right? A, B, C, A, B, C. That's how you begin counting. That's what I was saying. So there's your A for a B. Let's see how far the B gets. Is it going to be a zigzag? Are we going to come to the golden pocket and then come down here? Start like that. That's kind of, this is quite deep. So potentially a zigzag. And potentially just to the golden point. Let's see what happens. If it's not a zigzag, and if it starts going up, don't get bullish. It could just be an extended flat correction, yeah. And then extended flat will go up. It'll look like it's impulsing, but it's not. It'll be flat, but it'll be extended on both sides. It'll go down, it'll extend, it'll go up, and then come, but it's basically flat. Okay, so you're looking for a correction now, and in the context of this move, potentially you could time it as well. I'm just thinking about it, looking at it. It's quite balanced, and so to time these corrections, potentially a good way to do it is use this tool here, trend-based fib time. Start at the beginning, and you can go to the next pivot, the 1, and then to the 2. I have to calculate this because I haven't actually looked in depth to count the waves. So just because I've chucked these pivots and points, is this harmonics or Elliott waves? Elliott waves. Elliott waves. But Elliott waves and harmonics kind of coincide. They kind of work together a little bit. You have to count, yeah. So don't just blindly throw numbers and hope for the best. Count them, count the waves, yeah. So that you have to do it. You can't just be lazy. You have to kind of try and figure out where it began and where it ended, yeah. And you have to count 5 waves. And so just looking at this, it's not easy, huh? See, it's not easy. Sometimes it helps changing the timings and the time frame. Okay, maybe this one here was a 1, a small one here. Maybe a little kind of ABC here, ABC, down to 2. Maybe you just had a really crazy 3 all the way up to there, and a 4 and a 5 there. Potentially, I'm just imagining what could be correct. Let me just change the color so we can all kind of see it together. Let me this too could have started here. This could be a flat. And that's why it's important to count 1, 2, 3. It's not easy to tell. 2. Probably doesn't matter. It could be right. It's just it was so bullish that these corrections are actually going up, so it's not easy to see. Yeah, so it looks like it's impulsing, but it's not. It's just correcting. It's just correcting up because people are buying. That's what's happening here. And there is a way to check to check. And the way that I usually check is with this trend-based fib extension. And what I usually do is I take it from the 0 to the where I think the 2 is, and then I see if the fib extensions line up with the extension of the price action. Yeah, if I see that they line up, like here you see it comes all the way up to the 3.618. That kind of makes me think that this is what I've done is correct, because I've just done a trend-based fib extension from the 0 to the 1 to where I think potentially the 2 ended. Yeah, like this is like a little extended flat correction, and then you can see that it does look correct, like the 1 to 1, and then you see it does look okay. So I usually use that to check. This is pretty messy because it looks like it goes, the correction actually goes up, and this is like a really extended 3. Then you have a really kind of 4, which is effectively again, it's effectively a zigzag, or potentially you see potentially it's actually down to here. Potentially, see, this is the thing, like you could have an ABC down to there, and then you could have the 5 up to there. That's possible too. And then you have your 1 ends actually on the 5. Okay, so this 3 could have ended there, and you could have had this like an ABC correction here for a last wave 5. So that's why it's quite subjective, because you have to kind of try and imagine, count the waves, and then you also have to try and see if these later waves are actually corrective or if they're still part of the impulse. I mean, that 5, they could both work. Yeah, they could both work. And so that's why it's quite subjective. And then you still have to count. So I was thinking to myself, this whole thing was quite a flat correction, not really. And then you have to count. So if I have the 5 here, ABC, AB, no, see, there's no ABC, ABC. So if it was there, ABC, 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 see, that works. See that? So to there actually, let me see, to there it works, ABC, ABC. So actually that works to there, which makes me think something else then. ABC, ABC, ABC. Okay, that's fine. But then that 2 starts there. The 5 is there, and then the 1 is there. And effectively what you have is this. I'll show you A, B, C, A, B, C. Kind of like an A, B, C. See that? You're just counting ABCs to try and calculate. This looks better for me. 1, 2. I mean, could have started here and not there, but I'm just kind of taking it from the absolute low for now. And that's your correction. It's like, for me, that's quite flat. It's a combination of ABCs, but it's quite flat. And then you start impulsing again. You see that? Where it starts to impulse. You have your wave 1, another corrective move there. So let me just mark this out again, exactly the same way. One, ABC, that's another flat. Or extending, that's an extended flat. Now this is the tricky one. See, it doesn't go all the way up to there, it's to there. And then you have this little shitty red candle here. And then you have your wave 5. So the rules have to still apply. So just bear that in mind, yeah? For these impulsive rules, the impulsive waves, the rules have to apply. So same thing, 4 can't come underneath the 1. The 3 can't be the shortest. And you have to have 3 impulsive waves and 2 corrective waves, yeah? And sometimes, obviously, you can see how difficult it is, because you'll get this and you'll think, what kind of correction is that? And it's a correction in the context of this impulse. That's the correction. That little red 3-minute candle is the correction. It's very different to this, but it's never the same. It's never always the same, yeah? So you just have to take it as it comes. You see, you have a little correction there, and this is quite a long correction. But obviously you're looking for shorter corrections, because now we're in this subset impulse. We're in the child impulse of this 3. You do expect the 3 to be really kind of crazy impulsive, and that's what we had. We had a really crazy impulsive 3 after we had some kind of flattish correction here. This is quite flat, yeah, lots of ABCs and impulse 3. Then we had some kind of more a deeper zigzaggy type correction. Let me just go up to this time frame here. Let me see, let me just, I like to kind of work it out first. A, B, probably just said ABC, to be honest with you, all the way down to there. It's like a very straightforward zigzag, probably. It's probably something like that, yeah. Really straightforward, extended at the arm. You could do these trend-based fib extensions to see that this actually extended all the way to the 1.618. You see that? So from here, so except these trend-based fib extensions are they're so useful when you're trying to calculate the extent of corrections and how far they're going to go, how far you can expect them to go. You might get like a very shallow correction could bring you just back to the 618. Yeah, a normal, like in a balanced correction, could just be back to the 1-to-1, and then you have an extended zigzag which took you all the way down to the 1.618. So that was a good target for a reversal. Yeah, that was like a really extended, and as you can see, you had a reversal here. So as soon as you see the price coming back above fib levels that have been lost, that's giving you the clue, yeah. And as soon as you get back above this market structure here, above this little structure here, then you see the pylon began again. So people were just looking for an invalidation. That's what people are always doing. They're looking for an invalidation, and the best forms of invalidation are where the price gets back above market structure that's just been printed into the lows or to the highs. Yeah, that's the best kind of invalidation, market structure. And so that's probably some kind of zigzag there. And then you have another impulsive wave, and again the same thing. You count 5 waves. Count 5 waves. 1, 2, maybe 3, 4, 5. Okay. Exactly the same thing. Maybe like a 1, 2, 3, 4, 5. Something like that. That kind of, for me, that works. Yeah. I might have got 1 or 2 points not exactly correct. Okay, again, it's quite subjective, and someone's going to look at this and they're going to, oh, he got that wrong, he doesn't know what he's doing. You know, you have to go back, you have to reevaluate, you have to reanalyze, you have to do fib extensions, you have to do all these kind of fib retracements to hone in your analysis. You can't just go, this is it, I'm perfect. I admit this might not be perfect, this might be 95% or 90%, not 100%, but considering that I don't want to spend my whole life on this, then I'm okay with that. You know what I mean? Like if I wanted to spend the next 24 hours going candle to candle and analyzing this chart on the 1 minute time frame, sure, but I think this is enough. Yeah, I think most people will agree that this is adequate for what we're trying to do, which is just analyze the charts and try and see what can and will or could happen next. Yeah, this, I think you'll agree that was quite okay. This is okay. We have our corrections, we have our impulses, and we've counted the waves. All right, it kind of ties into the segment that I did yesterday. Maybe actually I'll create a second segment on the execution of analyzing Elliott waves. Right, so we had our 5 waves. It's amazing we had it, and I was actually talking about it yesterday, and because I saw that we had 5 waves, I wasn't expecting another impulsive wave. Okay, now that's why I shorted because I saw that we had 5. I wasn't expecting more. Yeah, I didn't even have any other reason to short. I just saw that we had 5 waves. I saw that this last wave I can see that it done 5 waves. I didn't count it, I just saw it, and then I shorted. And what's happening now is some kind of correction. Yeah, now technically, and it's kind of what I was saying yesterday, and so let me just put all of this into one folder. Technically, after you've put in your pivot, end of wave 5, as long as you don't come back underneath the starting point, this is valid. Yeah, so that is your invalidation for this 5 wave Elliott wave. Okay, and you just have to bear that in mind. So you can't think that if the price now suddenly comes all the way down here, oh god, this is all over, this is rubbish, this doesn't work, or this is not correct. It's absolutely correct for the price to come all the way back. It just can't make a lower low. That's all. Okay, so you have an invalidation now. It's a very defined and very strict invalidation. It helps because that is a liquidation level now, and you wouldn't expect, if we now somehow come down and put in a lower low here, this whole wave, 5 waves Elliott wave, is invalidated. Throw it away because you've just put in a lower low. That's your corrective wave. Okay, that doesn't work, and you have to start over. Okay, and I'll show you where that happened before, and I'll show you, okay, because you had something similar at the beginning of when Slerf launched, something very similar. You had quite an impulsive launch. Let me see if I could find it for you. Oh my god, where's the charts? Have to go back to slightly lower time frames so you can see what I'm talking about. Again, I'm not going to go into crazy depth, but you have potentially a wave 1 there, wave 2, wave 3, wave 4, wave 5. You potentially got wave 5 waves at the launch. The rules are all applicable. This doesn't come underneath the first 0, and the 4 doesn't come underneath the top of the 1, and the 3 is not the shortest. Okay, you potentially have your 5 waves there. Okay, but this whole idea is invalidated. Why? Because we took out the low. See that? What happens when you take out the low? This. See that? So you invalidated that 5 waves. If the price would have held here and didn't put in a low, then we might have got the next 5 waves. We might have got the next impulse. but it didn't happen because we took out the low, invalidated that initial 5 waves from the launch, and so you have to reset the count. But actually that was quite bearish to do that, and the price dumped after that happened. So you just have to be careful. If we do actually take out the low of this first wave 1 Elliott wave, that's going to be quite bearish. Yeah, you don't want that to happen. And then the other thing that I was kind of thinking to myself is, while we have our wave 1 here, which could be the wave 1 of the wave 3, and the reason why I'm saying it could be the wave 1 of the wave 3 is because potentially there's 5 waves in this move here. Okay, I haven't really gone into depth into this. Maybe I should, but I kind of think there is, because I see it's quite impulsive. And basically what you have here, without going into too much detail, is your really impulsive wave 1, something like this, some kind of flat correction here. Don't know. 2, 3. It's not easy, but potentially what you've got is your crazy wave 1 and a shit 3 and 5. Basically, that's what that's why I'm contemplating. Yeah, and they still have to follow the rules. That's the thing. That's the problem. And so you just have to. I'm not sure. Would it be to there? 1, 2, 3, 4, 5 to there. Coming back here to there. Could that be it? That's kind of what I'm Cactus time to sell. Kenza Dion, what's your price prediction, Slerf, in 2025? We can talk about that. So you see you had a crazy one. It's kind of what I was saying, when you have like a really extended initial impulse and then a smaller 3, you know, smaller 3, then you're going to have a mediocre, really sub-mediocre 5. Yeah, so it gets less and less and less. If you have a really crazy one, potentially that's your wave 1 there. That's what I'm imagining. Again, if here the price had come all the way down to take out this low, this would have invalidated. So that's kind of what I was thinking. I was thinking this is some kind of wave 1. Haven't really gone into too much depth. Could that 2 be here? Of course. Like I'm just taking a stab at it. I'm not I'm not saying this is perfect. I'm just taking a stab at it. I just want to make sure the rules are followed. So 4 can't come underneath the 1, the 3 can't be the shortest, and the 2 can't come underneath the 0. That's it. You follow the rules, count the waves, make sure it's impulsive odd numbers, make sure it's corrective even numbers, and make sure that the corrections are formations of ABCs, and you've got your 5 waves. Okay, so if that is your wave 1 up to there, and that's your 2, guess what, we're in the 3, 4, 5, and that's kind of what I'm contemplating at the moment. And obviously if that changes, we'll have to update it. It's not a big deal. Yeah, this is relatively speaking speculative, and that's all we're doing right now. We're speculating, and we're just trying to see if we can somehow help ourselves to predict the future. Right now, because we've just put in a wave 1, which is potentially the wave 1 of this 3, yeah, the rules apply. We don't want the price to come back and take out that low. If that takes out that low, this wave 1 invalidates. It doesn't invalidate this, because this wave 1, as long as this 2 doesn't come underneath the 0 here, it just means we're still correcting. It just means that this correction continues. That's all. Some kind of crazy correction. And it continues until we can actually impulse out of here and start our next 5 waves, which is a combination of 5 waves to create this wave 3. Yeah, that's what we want to see. I think we're okay. You know, I think because of the other things that we've been looking at, I think this could be the beginning of the wave 3. I think we could have just had the wave 1 of the wave 3. That's what I think. And that's really exciting because guess what? The 3 of 3 is the most bullish. Yeah. The wave 3 of the wave 3 is the most bullish wave. It's the most impulsive wave. Yeah. So the fact that we're on the precipice of wave 2 correction leading us into the wave 3 of 3 should get everyone here excited. Yeah. And that's why it's good to count. That's why it's good to track these Elliott waves, because we want to be involved in that. I'm not too worried that I wasn't 100x max whatever on this move, but I definitely want to be in on the next one. The next one is going to be, for me, the big one. Doesn't mean we don't have resistance levels to break, but looking at the move yesterday and looking at how mad it was and how impulsive it was and how it just sliced through resistance levels like they didn't even exist, it makes me think that you don't want to miss out on the future of Slerf. Yeah, like that was really a taste of things to come. Then I think Slerf has got a really good future, yeah, in terms of increases in value. That's what I think. I could be corrected, I could be wrong, but you know, it's just all opinion at the end of the day. So does that help with this kind of idea of what I'm imagining in terms of Elliott waves? Let me just put that in this group again. Let's put it all together. Let me just see what it looks like together. All right. So actually, that was right. Let's just get rid of that blue one. Keep the light blue one. That's fine. Which one was that one? That was the impulse there. Corrective, corrective, corrective. Impulse. How was that big one? Is it that one? That's the one. Okay, let's just put that bottom. So actually what I want to do is, let me just separate them because it'll be easier to hide. So this one, yep. And then where's that one? Okay. So let me just call this one, rename Elliott Wave, wave 1, 3. It's good to kind of separate these so you can kind of hide them as well easily, right? So let's go to the current one that we're in now. Gary's saying all in Slerf, BTC of Soul. I said that. I made a video saying that is Slerf the new BTC of Soul, didn't I? That's probably why you came and joined this channel, because you're like, yeah, he's right. So we're looking at some kind of correction here. Yeah, you've got your 1 2 3 4 5. I've counted the corrections, the ABCs. I've counted the 5 waves. I've checked to make sure the rules are all intact, which they are. I've put it in context of a higher time frame Elliott wave count, which gives me the idea now for this wave 1 to be correct. We can't take out this low, so we have a definite floor now. Like if you want to have an invalidation, that's it. Yeah, if we take out that low, it breaks. This breaks, and if this breaks, we're probably going down. Probably going down. So now looking at the now that we have this idea intact, the other thing you can do is timings, and you do timings in the context of the waves. Yeah. So there's 2 things you can do. You can do extensions based on trend, and then you can do fib timings. And so you can do it on a higher time frame, and I will do it on a higher time frame, and then you can do it on the lower time frame. And if it doesn't match, it doesn't match. That's not a problem. But then sometimes some things do match. Yeah, they're the ones you're interested. You're not interested if it doesn't match, if you don't get any kind of confluence. You're interested if you do get confluence. Okay, so you see, this is my higher time frame. If this is correct, okay. The reason why I say if, because again, there's always an element of error. You know, like I'm only human. and I'm just looking at the charts. I'm trying to read the charts. Maybe I made a mistake. It's possible. So that's why I say if. But here, look. So you use this tool. It's called the trend-based fib time. And then what you can do is you can map it. Start off with the 0. Go to the top of the 1, which is the 5, the end of the 5. Yeah. And that's quite interesting as well. So people don't quite understand this. And I'm just going to explain. This wave 1 ends at the 5. So if you have an extended, some kind of extended 3, the wave 1 isn't to the top, it's to the 5. Yeah. So if you have an extended 3 and then a smaller 5, and that's where the 5 ends, the wave 1 ends at the 5, not at the top of the 3. It'll help you to know that. Yeah, because sometimes it does. Sometimes you get a less expansive, less impulsive 5, and that's actually where your wave 1 ends. And then when you're going to use this tool like trend based, well, not fib time actually, because fib time is based on time, but this one, trend based fib extension, then you'll want to do it from the 0 to the end of the 5, not to the top. Now in this case, the 5 is the top, so you take it to the top, but you wouldn't, if the 5 wasn't the top, you'd still take it to the 5, and then you take it to where the 2 begins. So again, not down to the bottom, you take it down to the 2. Okay. And so there is another question here, and I just want to kind of highlight it. Is this impulsive, this move here? And that's the other thing you have to bear in mind, because you do see these kind of moves and you think, could that be your wave 1? Could this be the wave 3? And I'm going to talk about that in a second. Okay. But let me just finish this. So you have this trend-based fib extension from the 0 to the 1 to the 2. That's our kind of, this is where we're thinking the 0 to the 1 to the 2 is. And that gives you fib extension targets based on the trend, based on Elliott waves. 0 to the 1 to the 2. Now we know that the 618 is at 48. 0, see that? And then you've got the 1 to 1, which is at 7, etc. All right. It doesn't help right now, but if you do this and you find confluence, then it really does help. Okay, so it's all about confluence, and it's also about like realistic targets. So if we have, in the context of this move, if we have an extended 3, like a really extended 3, then you're targeting 1.2. That would be an extended 3 in the context of this wave, of these waves. Wave 1, wave 2. Now you're targeting, that would be an extended 3, be all the way up to 1.2. Yeah. And obviously then the rules still apply. So the 4 can't come underneath the 5. That kind of works because that would be down to the 0.618 thereabouts if that was to happen. And of course the 5 can be less or more, it doesn't matter as long as the 3 is not the smallest. Okay, that would be extended 3. And a mediocre 3, well, it wouldn't work if it's less than the initial pivot, because then the 4 can't come underneath the top of the 1. So this 3 has to be more than the 1, has to be. And if it's smaller, and this is the thing we have to see, if it's smaller than the 1, if that's the 1 and this 3 is shorter than the 1, then the 5 has to be shorter. Okay, but then also you have to apply the rules. 4 can't come underneath there, and then potentially a 5 could be like that. Yeah, just because you know it doesn't have to go all the way up there, it could just be there. You just have to count the waves, count the 5 waves. And so if we get into a situation where the price does go up to there and then the 4 comes all the way back down to there, then this whole thing is not correct. Yeah. Alex, I don't understand what that means. I want to candle on Slerf just like CTK did today. So we just have to, what I'm saying is that it's a work in progress. We have to keep on analyzing, keep on updating, keep on, you can't be an analyst or a chart technical do technical analysis if you just look at the chart once a week and hope for the best. You're basically going to have to do it on a daily basis. That's going to give you the edge. That's going to give you the clues that you need to know when not to FOMO in and when to buy or when to sell. Good places to buy and sell. Right. So let's just say that, so one idea was a trend-based extension based on 0 to 1 to 2. So that's at the moment it's not actually helpful. So because it's not helpful, I'm just going to ignore it. And then the other thing that we could do is this one, which is trend-based fib time. Again, same idea. You can do it from the 0 to the 1 to the 2, roughly. Normally when I'm analyzing, I'll do it precisely, but just for the sake of this for this stream, I'll just be quick. And that gives you, and so trend-based fib time, you have to change the coordinates yourselves, because the default, let me just change it back to the default, is that shit. Look at that. It's very unhelpful. So you have to go in there and change it. And obviously here they use 382, 618, whatever. And basically you can just get rid of all that trash. The ones that I use are the 618s and the whole numbers all the way up. That's a 6. I'm going to say 6, 5. It doesn't matter. You can mix and match. But that's kind of what you're looking for. You're looking for the 618s and the whole numbers. And it doesn't always help, but sometimes it does, because that's how the price moves. The price moves harmonically based on time as well. And this gives you an idea of timings. Okay. Now, at the moment, it's not helpful at all. So I would probably ignore it at the moment. I can't see how it helps me. And so I don't just use it just because it could be good. I want to see, what I usually do is I want to see that it works first. And so you can do the same thing with the subset waves. And maybe you don't always have to go to the 1 to the 2. You could go to, say, the 3 to the 4, for example. Yeah. You can do that too. You can skip. But you're basically going from pivot to pivot to pivot. I'm not really getting any help from this. I just wanted to show you. It can be useful. I can't see any use in it right now, so I'm not going to bother. And then the other thing you can do also is you take it from the 0 to the 1, but rather than expand it, you can just end it at the 1. Okay. Again, I can't see how it's helping, so I'm not going to. It does help a little bit, but not really much. You see here, from the 0 to the 1, you see here on the 618 how it actually put in a pivot there. You see that? So it did help. It does work, but not always. It's quite subjective. You wouldn't take fib time on its own. Fib time is really good when you combine it with other forms of higher time frame analysis, because it just helps you with the timings. Okay, so if you get the price move into an area of interest on some sort of major fib time, so the major fib times are the 618s and the whole numbers, then that can give you confidence, more confidence to take that trade. So you see in this context, from this pivot to the top of the 1, you see the first 618 actually did give you some kind of pivot. This one actually did give us, see, this almost, it was front run a little bit, but it gave us a pivot there, but then the rest kind of didn't. So it's not always good, but when it is, it is. Okay, it takes a bit of time and practice to use it. I mark it off, and if I see something, I'll use it, and if I don't, I'll just get rid of it. But anyway, I can't see anything, so it doesn't really help. In this context though, you can also potentially do the same thing. Let's say the 0 starts here. That's the top of the 3. This is the bottom of the 4. Yeah. So you see right now it's already given us a 618 here and a 1 here. You see that? It's quite interesting how we get a corrective pivot right on some kind of fib time here based on the 0 to the 1 to the bottom of the 4, 0 to the 3 to the bottom of the 4. See that? It's quite interesting. So it does work, but you have to kind of play around with it, and you have to kind of see. Now that I see that that's worked, yeah, and actually let me have a look at this. Right into the golden pocket on fib time. See that? Based on this move, and then you have a rejection. I wasn't expecting up. I did tell you I'm expecting a correction. Yeah. How do I know that? Because we've had our 5 waves. Now we're in a corrective move. Yeah. We've had quite a deep correction here. So we're probably forming some kind of zigzag. What kind of zigzag is it going to be? I don't know. Could it be an ABC? Yes. Or could it be a combination of ABCs? Could it be ABC, ABC, ABC? You know, it could be that. It could do that. You know, we don't know. We have to see what happens. But usually when it comes to these corrections, you want to be shorting. You don't want to be buying. Usually you want to short until the correction is over. You're looking for shorts now because it's a correction. So in a correction, if the price has gone up and if the price is correcting, the price wants to now go down. It's the same with all these corrections. If the impulse is to the downside, then the correction is to buy, to go up. Yeah. And if the impulse is to the upside, then the correction is down. Yeah. So you have to be on the right side of the movement of the price action. And that's why Elliott waves are helpful. So while some people are still looking to buy because they don't want to miss out, they don't want to FOMO in. Sorry, they're trying to FOMO in. The reality is the move is over. Yeah. And now we're in a correction. And so in a correction, it's usually always better to go in the opposite direction, are you short? And then sometimes you'll get flat corrections or extended flat corrections, and then it becomes a lot harder because it's just too bullish, right? It's just extremely bullish, and you'll get a really flat correction and shorts get punished. Okay, and it doesn't happen often. If that happens, if you start seeing a correction is flat, you really want to be actually buying, not selling. Yeah, right now I'm not seeing that because we've already had quite a deep initial pullback, so it's looking like some kind of deeper zigzag type correction, and I'm not surprised because it was very impulsive. It was extremely impulsive, and we've created a lot of market gaps, volume gaps on the way up, and the market doesn't like gaps, so the market will try to fill those gaps, and that's perfectly normal. It's perfectly normal price action. It's hard to trade corrective moves. It's not easy to trade. It's a lot easier to trade impulsive moves because you just buy and the price just goes up. You don't even think about it. Corrections are a lot more tricky, and so the best thing to do, the best advice that I would say is start counting them, and that will help. So right now we are looking at an ABC. Yeah, let's start with ABCs. There's your A, maybe that's your B. Look for a C now. Look for the end of the C. This one was, you see here, we used trend-based fib time. Trend-based extension to calculate that this came to the 1.618. So we already know that Slerf has the potential for correcting the price down to the 1.618. You can do exactly the same thing with this. Oh, sugar, that was the wrong one. You can do exactly the same thing with this. Now, that could help you sell, or that could help you buy. In this context, the 1.618 is all the way down to here. Okay. Doesn't have to go down in one move. You could have multiple kind of but that would be quite extended. Yeah, that would be quite extended. And you have to see, we have to see what happens. No one really knows. That's or you can just come back to the 618 here, and you could start forming kind of, you could start doing this and start forming some kind of flat correction in the highs here. It would look bullish, it will look impulsive, but it isn't. It's still correcting. You just have to count, and it just helps because eventually, once the correction is over, let's just say hypothetically we are just kind of dropping. I'm just making this up. This is all speculative. I don't know. I'm just making this up. Let's say we have a really prolonged, deep combination of zigzags taking us down to that kind of 1.618 area down to here. The good thing about counting is that eventually you'll end up with a C after a combination of ABC, ABC, ABCs. And then the good thing about longing at the end of a balanced correction like that, where you have lots of ABCs, is that bulls and bears will be buying at the same time. That's why you get the impulses, because you suddenly get bears buying the A, potentially the next day if they imagine the correction to change, and then also bulls are looking for the next kind of 1, 2, whatever, 3, 4, 5. So you get this confluence of buying at the end of the correction, where you have the end of the correction, and then you also have the beginning of the impulse, or the beginning of the new section or segment of the correction, which actually ends up in people doing the same action at the same time at the same place, which is partly why you get impulsive moves, partly, yeah, because you just get everyone buying at the same time. It's quite impulsive, and so that's what we're looking for right now. So we're looking for a correction. We're not looking for an impulse. Okay, in my opinion, it's just my opinion, it's better to sell. It's better not to try and catch the bottom here, yeah, because no one knows how far this is going to go. And remember what I said, this is your this is the target, yeah, so it's quite a long distance. If you're buying, you'd have to have a really wide stop, and by the time it's down here, wherever it gets to, if you keep on buying, you could be underwater for a long period of time. And if the worst case scenario, the price goes all the way down and puts in the low, you'll get liquidated, and actually you should have been selling. Okay, so in the context of corrections, when the price is impulse, it's probably better to sell, probably better to look for lower highs. We haven't actually changed market structure yet, so it is still bullish, and that's how we're going to see. Like, this is the thing. If we continue with some kind of bullish market structure, if the bullish market structure doesn't change on the local level, on the local time frame, if we end up here putting in higher lows, then we could be seeing a really bullish correction. Yeah, if you see that, that's really bullish, because you're maintaining market structure and you still want to see the correction end, but it's just really bullish to see higher lows if we start seeing higher lows. Okay, so just be aware of that. It'll be a lot easier to sell if there's a market structure change to bearish, but if suddenly you see another push up, it's not the beginning of the impulse yet. I mean, in the context of this correction, in the context of this impulse, just based on fib time, just take it from 1 to 5. At least you'd expect it to go to the 618, at least, at the very least, just from the 0 to the 1. You'd at least expect the correction to go all the way to there, at the very least. Yeah, that's what I would be expecting. I wouldn't want to buy looking for an impulsive move until at the very least we pass the 618 just on this whole wave. Yeah, it'd be too quick. Yeah, since timing is really important. And then you can also use that information or if I do it from the 3 to the 2, sorry, the 3 to the 4, that gave me that pivot. Yeah, I think just there, double click there, at least to there, to see what happens. And it'll, as time passes, it becomes easier and easier and easier as time passes, yeah, because you get more information, you're able to start drawing and mapping, and it's like plotting a course, you know, it becomes easier as you get more information. All right, so that's kind of my Elliott Wave update on this, and I hope that helps people to understand Elliott Waves a little bit better. This kind of ties into the other kind of the lesson from yesterday. Any questions on that? Now, looking at Slerf